Hello, everybody. How are you, everyone? We're about to get started. 10 seconds to go. Before we get started, it's always nice to have a quick sound check to make sure sound is good. The best way to do this is just to type a quick hello on the chat box. If I see you typing hello, that means that you heard me. That means sound is good. That's a great way to begin with a quick hello. That's always nice. So please do that when you have a moment. And in the meantime, I will be launching the session. It's time to begin. This is our multi-asset CFD trading session in partnership with City Index. Today is November 7, 2022. My name is Jose Blasco. You can see my email address on the screen as well. In case you need anything from me, you are welcome to get in touch directly with me anytime, any other day, even if you're watching this recorded instead of live. For sure, happy to help. Before we get started, and as I watch for those hello messages on the chat box, I would like to highlight our financial disclaimer, which is being highlighted slowly, so it gives you time to read it. It is important information, so I would like to request everyone to read it completely. Again, trading carries with it financial risk. It's important to be aware of the risks of the market before putting your money in the market. And again, the session is all about risk management, approaching trading like the professionals we do, understanding the risk and the reward of every trade, executing with discipline. So it's all about doing the right thing. But beyond that, there is regulation, etc., etc. So please read the financial disclaimer completely. It is important information, and it has been highlighted for you. As we begin, and as more traders are joining the session, I would like to flash the agenda for today. So we're gonna get ready to trade. We're gonna talk about the tools that we use, how to connect with your City Index account, etc., etc. So we'll get ready, and then we're going to be looking at a collection of different markets. The main focus will be Forex and indices, but certainly happy to look at any other market, especially if on the chat box you'd like me to check, I don't know, McDonald's, Apple, any stock, any market. You can feel free to type it on the chat box, and I will go ahead and do that for you. I would want to make sure that everybody, in case some of you are new to the sessions or you're watching this recorded, I want to make sure for everybody for today's and future sessions that my request, if I may, is that you are not shy. So please be interactive, be engaged, ask questions, because if you do, I can help you better. If you remain quiet in your corner, if I may say it this way, you may have questions that would be important to clarify, but if you don't ask, then I don't know, and then I'm limited on how much I can help, and this session really is all about you. So please make sure you interact with me, and we can make this session powerful. We can make this session to count. Okay, so I'm counting on you to do that. Please do not be shy, and let's have a great session in front of us. Thank you so much for that, Jeff. This is nice. Yeah, and I can see multiple members that are in the session that didn't say hi yet. So if you just joined, I was requesting a quick hello on the chat box, just to make sure that sound is good, just to also make sure everybody knows how to use the chat box, and also just to start warming up to be interactive instead of you watching the session passively. I would love it that this session is a work session between you and I, where we can team up and seize the opportunities available in the marketplace, either both from a financial standpoint as well as from a learning experience or anything else or any of the above. Okay, so let's have fun. As we are getting started as well, as you know, the session is in partnership with City Index, and I would like to present to you here on the screen, so you can scan them, a couple of QR codes that would bring you to the City Index page, specifically to the City Index rewards and benefits. There are multiple rewards and benefits attached to becoming a City Index client, and you can read more about that on the website. But again, there are things such as rebates and things like that. So it's really a great place where to be, apart from the fact that City Index, apart from a great partner, is also a great broker. The parent company of City Index is the StoneX Group, which is the largest FCM in the world. So really that says a lot, right? So again, great benefits. Take a look at the website, and also the QR code on the right, which has to do with the knockout options promotion. So the knockout options, for the ones of you that may not know about them, they allow you to trade in a way where slippage and surprises are totally kept under control. So if instead of buying a CFD or shorting a CFD and set a target and a stop, which is what I normally do during the sessions, if instead of doing it this way, you were to buy a knockout option, you basically have a predefined risk that even if the market was to gap against you, move crazy, experience a level of volatility to the roof, which in a normal case you would get slippage and you would end up losing more than expected. With the knockout options, your risk is totally limited at that knockout price. And since you decide what is the knockout price and how far the knockout price is from the current price, so the nearer it is, basically the least the risk, and therefore the least the amount of margin that you will be charged. So in other words, you have control over leverage and margin with the knockout options, as well as a very powerful way on how to mitigate and have that risk under control. So again, out of simplicity during the session today, since it's been around a month that we have been running sessions together, I will be focusing on the CFDs themselves, but know that any trade that I plan with the CFDs could actually be taken with the knockout options, and there is a promotion that is being run by CT Index at the moment. Whereas if you can read more about that on their website, but if you fund an account with $2,000, you get 10% cash back. I think it's $200, which is 10% of $2,000. I believe just by taking one trade, I believe 1 or 2 trades, and you get that back. So again, great tools to get you started, get great tools to practice, and all of that. Okay, so take a look, and I will flash these QR codes one more time later for the ones of you that may be watching this recorded or maybe coming late to the live session. Okay. Anyway, so let's begin. And I am now moving into the real-time charts. Here we go. Here are the real-time charts, and this is where we're going to start planning on our trades. But remember, the beginning part of the session is to get organized, to get ready to trade. And in that sense, I want to show you another tool, which is this one here, which I'm bringing to the screen right now. So this website, okay, is the web trader of CT Index, right? Which it's basically the platform that you access on their website with your username and password that you have when you open an account. And thanks to that, so you can execute trades, you can browse at market, you can look at all the FX currency pairs, could be the majors, could be euro crosses, could be pound crosses, could be Aussie crosses. You have knockout options here. You have indices. Indices are very, very nicely organized on the page. So you have UK indices, US indices, indices in Europe, Australia, Asia. So all sorts of markets. You have US equities. Again, all sorts of markets really. And you can get them all here. You can, you can, let me get China, for example. So if I double click on that, you get the chart and you can take the trades from here, etc., etc. So again, WebTrader is such a powerful tool that you get access to when you have an account with CT Index. But having said that, while it's very nice to use, I will actually be using TradingView during the session. And here's TradingView. I will actually be using TradingView during the session because TradingView is a broker agnostic trading platform, which while is broker agnostic, and you can use it just to plan your trades and then turn around and either use the CT Index mobile app or use WebTrader, as I just mentioned, and take your trades here. The beauty of TradingView is that, number one, you can actually connect it to CT Index. So while TradingView is not CT Index, you could actually trade through CT Index via using TradingView. So hopefully I'm not confusing anyone. And that's beauty number one. And beauty number two is that on top of that, now on TradingView, you can use the UFOs, which is the trading technique that I use myself when I trade, which I will be obviously giving you more about it during the session. I will share more about the rationale, how I use it, etc., etc. But again, the UFOs could be enabled inside TradingView, and therefore you're killing two birds on one stone by using TradingView, which is to have access to very advanced trading tools. On top of that, you can connect it to your CT Index account. So, you could actually not use WebTrader at all if you choose to. In this session, just to give you all sort of possibilities and help everyone because everybody has a different preference. I will be using WebTrader. I will be using TradingView. I will be switching back and forth between platforms. So I show you all how to do everything. But again, the bread and butter for me is going to be TradingView, given the fact that certainly I rely on the UFOs to plan and confirm my trade setups. Okay, so so the last question before we begin planning on trade number one is, so how do you connect TradingView to CT index? And even before that, if I could take one step back, how do you get TradingView in the first place? Well, to get TradingView in the first place is very simple. You go to tradewithufos.com/tradingview. Okay, I would write it on the screen. So you go to, sorry about that, I just hit the wrong key combination. So you go to tradewithufos.com/tradingview. You can also go to tradingview.com, but then you need to navigate to where the right place is. And when you go to tradewithufos.com/tradingview, it's going to bring you straight to the page you want to use. Once you come here, notice how you are being provided with monthly payments. Okay, just forget about this. Ignore this. You can just scroll down, and a bit lower it says try the free basic. And here's a tricky word because it says try, but the reality is that this is not a trial. This is a lifelong free membership. It's called the basic plan, which provide, I would say, all the features that 99% of traders would need, and it's all free. Of course, if you want to have, you want to have, instead of one chart at a time, you want to have two charts at a time. So then you may want to consider to be a pro user. But again, for most traders, the basic membership, which is free, it's probably good enough. So you come here, okay, tradewithufos.com/tradingview. You sign up for the free membership. Now you have a username and a password on TradingView. And now you can either use TradingView on their website. Okay, you can either use TradingView on their website, which would be done by typing tradingview.com, and then you log in. Okay, sorry, I need to click in the right place. Exactly, sign in. And my username is Jose Blasco. So I sign in, and now I come to TradingView and I can click on, hey, I want a chart. And here are my charts. This is a free membership. Okay, here are the charts of TradingView. They are here, and now I can start planning on my trades. Okay, or apart from using TradingView on the chart, you can also go back to the website, tradingview.com, and notice how under more, you can actually download the desktop application. Just like you can download the mobile app, you can also download a desktop application that does not run inside your browser window. It runs outside the browser window. And that's what I have on the screen right now. So this is TradingView, which is the downloadable platform, which again may bring a little bit more stability, if you wish, in the sense that, if you run it on your browser, maybe you have 3 tabs with YouTube videos and it's slowing down your computer or something like that, and maybe TradingView runs a bit slow. Where if you have it as a standalone independent installation, you are basically guaranteed it's going to be as stable as it gets. Okay, which is pretty cool. Now you have your TradingView either downloaded or on the web or on the mobile. Now you want to connect it to CT Index. What do? You come down here where it says Trading Panel. You go to the Trading Panel. From the list of brokers, you select CT Index. You type your username. You type your password, which, as you can see, I have it memorized, so I can save myself typing. And the moment you connect, you will see now Trading Panel has changed to CT Index green color light, which means I am now connected live to the account. I actually have a trade running with the Canadian dollar, Japanese yen, which is currently making $87.84. And this trade is running live. And by the way, if I look at this trade on WebTrader, the same trade on WebTrader is showing here. Okay, even though here it's measuring on pips, If I was to look at the P&L, it's showing the P&L in Japanese yen. If you convert the Japanese yen, 12,000, almost 13,000 Japanese yen happens to be $87. Okay, so TradingView normally works in US dollars, and there are some options for customization as well. Okay, so we are ready to go, my friends. Okay, it took a little bit of time here because out of prior sessions, it seems that in prior sessions I may have been a bit too fast on explaining the connection of TradingView to your CT index account. And hopefully this is now clear. I would love it, guys. I see many of you connected live. I would love it if you could type on the chat box a quick okay, just a two letters word, a quick okay if all is good, or if you have any question, this is the moment to type before I start with the trades. Because as I start with the trades, here's my plan. We got 45 minutes in front of us. I plan to start slow with longer term type of trades, so it gives me time to explain and discuss. And from there, I'm going to start accelerating. And you can see I tend to speak fast. I guess you know that if you've been in prior sessions. But you will see how I take a little bit of time to explain the whole rationale about the trade setups and my initial trades. And from there, I will drop time frames and I will speed up the planning so we can go from longer term trades to intermediate term trades to short term trades to day trades. So I can cover all markets, all styles, and hopefully, enrich you on how your trading could be, on how improving your trading methods could be, on how I manage the trades, and all of the above. So please feel free to share, ask questions. Freddie, thank you so much for that confirmation. Jeff, thank you so much. Everyone, this is very nice. Okay, so please work with me on that. Okay, wonderful. So first of all, I'm going to start with longer term trades. To look at longer term trades, a very convenient type of setups that I love to exploit are trades where we get paid swaps. And actually, we have one running with the Canadian dollar, Japanese yen, which you saw a moment ago. Okay, so we have a trade which is currently making $90.99. Okay, so this is a trade that was executed some time ago when the Canadian dollar, came to one of these locations and from there started moving in the opposite direction. Okay, so we are in this trade. Maybe it's better if I switch time from here a bit. Okay, here we go. So this is, when the price of the Canadian dollar came into this UFO, we got into a trade, and our target is a bit higher, to be honest. We're getting close to the target. We're going to make $143 if this trade works according to plan. But let me talk a bit about the trade setup, and also let me take advantage of this trade, which is live and open, to also talk about trade management, which are a series of things that we could do during the life of the trade, which is the case. And once the trade setup and the trade management is understood, then I'll move into finding new opportunities. Okay, because we are meeting once a week on the Mondays, isn't it? And this is so far the first time that we have the opportunity to review a trade which is in the account as we speak. So that's a great opportunity I don't want to miss, because trade management, it's extremely relevant. We have many trades that we have planned in prior sessions that if you had taken them and managed them, they would be profitable. But we also have a collection of trades planned in the prior sessions where if you had taken them and didn't do anything about them, those trades were profitable for a while and then they turned around and ended up as a loss. So again, trade management is key, because it happens that you take a trade, the market starts moving your way, and then something may happen in the marketplace and you may end up seeing a profitable trade to turn into a loser. And if you could avoid that to happen, that would certainly help your account, your confidence, your passion for trading, and all of the above, isn't it? So trade management is key. That's what I'm trying to say. And today we have an opportunity to talk about it. So let's begin first with understanding the rationale of the trade. To understand the rationale of the trade, notice how on the left, I have a weekly time frame of the Canadian dollar, Japanese yen, and it's a gray color chart background, which I use a gray colored background on purpose to differentiate the chart on the right, which is white colored background, which is a chart with the UFOs. So what I have on the right is the UFOs. Okay, I have a green UFO there, which I pointed with the arrow. And what I have on the left with the weekly time frame is I have the auto climate running here on the bottom part, which shows as blue. So this is a weekly time frame on the left, which means that we get one candle per week, which means that if this was to be last week, then this market would look like that, one candle less. So what did we saw last week? Well, last week we saw an up climate. By the way, auto climate is a tool which is free that you can find on our website if you go to tradewithufos.com/apps. Okay, so you can find it there. Okay, and it's a free tool. So feel free to go and click on the subscription. You get it. Our activations team will enable it in your trading view, and now you have it. And what is AutoClimate telling us? Well, AutoClimate is telling us what is the statistical side of the market that carries with it a statistical advantage. So a key question when trading is, should I be a buyer or should I be a seller? A second key question in trading is, okay, now that I know I should be a buyer, or now that I know I should be a seller, which price should I buy at and which price should I sell at? So the prices at which we trade are key, but that question should be answered only after the first question, which is, should I be a buyer or should I be a seller? And AutoClimate does a very good job at giving us a measurement of the market condition, which last week told us that for the Canadian dollar, Japanese yen on a weekly time frame, which is long term, being a buyer, blue color, carries with it a statistical advantage. So can you make money on the way down? Yes, but probably only on the shorter time frames, catching shorter moves to the downside. If you expose yourself to weekly moves, AutoClimate, which processes a lot of market data, is telling us you have a statistical advantage by going long. Okay, it's not a guarantee, it's a statistical advantage. Okay, and probabilities are probabilities. You may have 99% probabilities, you still have 1% probability of failing, right? So it's probabilities, but it's a very good starting point instead of having a subjective opinion about, oh, it looks like blah, blah, blah. Every time you start with it looks like, it's subjective, and therefore you're exposed to how lucky you are. Instead, let's focus on stats, because more often than not, stats should, become a reality, even though sometimes they will fail because they are stats. So last Monday, we have an indication that told us being a buyer carries with it a statistical advantage to go long. So we were looking at the Canadian dollar, Japanese yen, and we were thinking, okay, let's find a good buying price. I don't want to short it, I want to buy it. So I want to find a good buying price. And the idea, the concept that we were discussing was the following. So notice that, for example, price came on that moment in time to close to this moving average, the black line, right? And when price came to the moving average, okay, so what happens is that price came there, okay, reacted to it. You can see how price comes to the average and reacts. In this case, it went through a little bit, okay, but still reacted to it, came back higher. It's a reference price point, okay? This is not the price point at which you want to trade. It's just a reference, okay? So around this price point, taking a trade to the long side makes sense. And notice that, in multiple occasions, so price came to around this price area, bounce, came to around this price area, bounce, came to around this price area here, a little bit more challenging, but it still bounced, came to around this price, a little bit more challenging, but still bounced. And last Monday, we went, actually, that was a perfect trade. We went to kiss the black line and it bounced up. Let me take a sip of water if you don't mind, guys. Okay, so we were looking for this type of setup, but again, the black line is just a reference, okay? And we had a blue line drawn there last week. And if you look at what I have on the right, so the blue line was more or less here, okay? More or less here. So if I go back in time as well on my chart on the left, and I go back to last Monday, that was Monday 24, okay? So we were here, okay? This is where the blue line was. That was our reference, okay? And on that particular date, we were looking for, hey, if the price of this currency comes around this price point, we want to be a buyer expecting it to bounce. And this is what happened. So you can see it came around this price point and it bounced. Okay, and this is how we got into this trade. Also, we got into this trade because there was a UFO around this price point. Okay, and the UFO is that kind of thing. The UFO, basically, UFO stands for on-field orders, and when it's green, you can find the UFOs, by the way, is our patented technology. You can also find it on our website on tradewithufos.com/apps. Okay, I'm just highlighting this on the screen one more time so you have it. So the UFO basically identifies buy on-field orders, and when plotting it, apart from giving you that flying saucer, which is the UFO if you wish, it's actually giving you an upper green line and a bottom green line, which identify a trade zone in which we want to be a buyer. And as long as our blue line is inside that zone, okay, which I believe we were using a 4-hour time from last week, if I'm not mistaken. Let me see if that's correct or not. So Monday, October 22nd. Monday, Friday, somewhere here. Yes. So if I go back in time to last Monday on the 4-hour time frame, let's see. Or maybe it was the 1-hour time frame, that I don't remember. I just would like to show you the trade setup. Let me see if we had it. No, so maybe it was a 1-hour time frame. Sorry for that. I just want for the new traders in the room that were not in prior sessions with us. I just want to make sure everybody has an easy way to understand the trade setup. I think it was somewhere here. Let me see. Yes, correct. I believe that was the case. So we have this green UFO. Exactly. So we had this green UFO. Yes, I believe that was the setup. And we had this blue line inside. So the green UFO was enveloping the blue line. And enveloping the blue line means that basically, if I was to draw it on the right, it's kind of like, let me see. Here we go. It's kind of like if we had like a buy zone, right, that is a little bit above and a little bit below the EMA, right? So we want to buy around the EMA because we use the EMA as a reference price point. We expect the turning point to take place around the EMA, but we need to know how much above and how much below the EMA, because the EMA, the moving average, the black line, it's only a reference, okay? So we use the UFOs for that purpose. And, again, later in the week, this is when price came to that UFO, okay, and the trade was taken. So let me get rid of the replay mode, okay? And this is how the trade was taken. So we are in this trade, okay, and this trade is profitable. We are making $87 at this moment in time. This is how we got in. We waited for price to come here, and we are now on the way up. But now the reality is that price, okay, if we look at the daily time frame, so price has been moving in our direction. And it's approaching our target located at 109.22, where we're going to make $143 if we get to this point, this trade, and then we should be out. But what if instead of that market go a bit higher and we reach full profit? What if the market goes back down and hit our stop and we lose $100, where we are currently making 87? That would be a sad story, isn't it? Oops, sorry for that. That would be a little bit of a sad story. So how can we avoid these kind of issues? Okay, how can we avoid these kind of issues? Well, one way to avoid these type of issues is to look at a lower time frame. So this is the daily time frame of the Canadian dollar. We can look at a 4-hour time frame or even a 1-hour time frame and see if new UFOs are formed on the way up, which in this case there are no UFOs on the way up. What about the 1-hour time frame? Well, the 1-hour time frame does provide UFOs. The UFO is right here, which, by the way, if I move the blue line, and that was not wise of me, I just moved it from the wrong place. So if I move the blue line to where the EMA is, which is 107.47, okay, so my EMA is down there, right? But so basically it has not moved too much, because let's face it, that market has not moved too much. It's 2 doji candles on the weekly time frame. But at the same time, while this market has not moved too much, on-field orders to buy have been added in those price points at 108 and at 108.01 as well. So what I would like to do here is I would like to set a stop below, okay, below the upper UFO, right, which is above my entry price. Okay, so take a look at this. My current stop is down here at 107.05. If I take my bottom stop, which is risking $100 for me, if I move it to below this particular UFO, right, and I release it right there, and I modify the order, okay, so what's going to happen now is that worst case, I'm going to make $14. So if the world is ending, doesn't matter, I'm going to make $14, right? And best case, I'm going to make my 143. Okay, so this is what I would do, and you could have been doing that on the way up. So you can see how this plays out. Again, I'm spending some time discussing trade management today, guys, because this is very relevant, and hopefully it helps. But take a look. As this was going up, a UFO here was created at 108.10. So my stop is located, higher than that. I'm going to use the blue line, okay, just to be visual. So if I had moved my stop below this, okay, and currently the currency, at that time was trading at 108.50 or something like that. So take a look at what happens if I fast forward the chart. So price, another UFO was created up here. So I could again trail my stop and move it below this. Okay, let me see. Price came to the green UFO. Okay, bounced from the UFO. So the UFO is gone, but notice how that UFO avoided the stop out. And to be honest, the stop could be there, right? The stop could be there, even though the UFO is not there. If you had done the trailing I mentioned before, the stop would actually be somewhere here, where you are locking in like $43 of profit. So I'm gonna put it there because this is where it would be if I had been doing that with you a few hours ago. So worst case, this trade would be making $43. Worst case, best case, this trade will make $143. I'm going to take a sip of water if you don't mind. Sorry about that. My throat is so I have to drink from time to time, if you don't mind. Anyway, so this is the trade we have running, and hopefully this trade example is serving as multiple purposes as to explaining the rationale for the trade, explaining the risk management, explaining the trade management, what to do during the life of the trade once you get filled. And this is an action that you could have applied to many of the trades that we have been planning since we started the sessions a month ago. And I would say the majority of your trades will have ended up as profits if you had done this. If you haven't done this, many trades went into profitable to then end up in a stop out. So you have to be aware that this is a normal consequence of trading, where assets out there are always depending on other assets. So if you trade currencies like the Canadian dollar, Japanese yen, and something happens to the US dollar, those currencies are going to react to it. So you may not be trading the US dollar, but other markets may impact your trade. If you trade stocks and something happens to the S&P, your stocks may move against you. And it's not because your stock is bad. It's because the S&P is moving. Or maybe you trade the S&P itself, and now the S&P moves against you, and it's because the German index DAX or the FTSE in the UK or any other market worldwide is experimenting a pretty massive sell-off or something like that, and next thing you know, that is having an effect on the S&P. So markets can always suffer consequences of other markets doing their thing, and one way to mitigate your risk is to approach your trades from a trade management point of view, like I have just demonstrated right now. So again, I would say this is a session for you to maybe watch again if you're watching this recorded. As Jeff said perfectly, safety goes first. Very well said, Jeff. Very good point. Very good practice. Very good mindsets. Very good. This is how traders we think. Okay. So having said all of that, which was a long conversation, let's look for more trades. So I am looking at plus swaps. Those are currencies that pay me swaps if I get long. Okay. So just for the ones of you that don't know what swaps are, let me show you. For example, browse markets. Let's look for Forex. Let's look for, what was the currency? New Zealand dollar, Swiss franc, for example. which is the first one I have in the list. Okay, it's just taking a little bit to load. This is a pretty long list, to be honest. So New Zealand dollar, Swiss franc. So if I load this one, take a look at what happened if I look at market 360, where this is going to tell me that I got a finance charge where I get paid positive 0.25 if I go long. Okay, so I make 25 cents for every 10,000 Swiss francs I trade. Every 10,000 New Zealand dollars I trade every day. Okay, that's the current rate, the current swap rate for this currency. So now if you get short, you have to pay 79 cents. So I don't want to get short. I want to go long because those are long-term trades. I plan to hold them for a long term, and therefore I'm going to get paid those swaps many times, because ideally I'm going to hold those trades for many days. So New Zealand dollar, Swiss franc, I want to find a buy setup. Problem, my climate is not confirmed, is a thin dot, is not thick like the one on the left, is thin, which means that the statistical advantage is not really present. So because the statistical advantage is not really present, I'm not going to even think about it. There are many currencies to trade. Let's move into New Zealand dollar, Japanese yen. And here, notice how I have an opportunity, okay? I have an opportunity, okay? And by the way, I'm happy to take it. Note of caution, because I am already in a trade with the Canadian dollar, Japanese yen, if I take another trade against the yen, I am doubling on my risk. Okay, huge correlation race there. But because I have already moved my stop on the Canadian dollar, Japanese yen, and the Canadian dollar, Japanese yen cannot lose money anymore, the worst case is to make $40+ in my trade. So I am indeed happy to explore if there is an opportunity to make money on the New Zealand or Japanese yen. If I had not moved my stop on the CAD yen, I would not be looking for a trade on the Kiwi yen. But because I have already moved my stop, then I'm okay. Okay, hopefully this is well understood. So how am I going to approach the trade? As I said before, I'm going to move my blue line to where the EMA is. Okay, this is going to show me on my chart on the right where the blue line is, and notice how on the daily time frame, this is D for daily, so on the daily time frame there is a UFO, but the blue line is right below. So we don't have a confluence that meets the rules. Okay, we have a set of rules which require an enveloping condition. So I'm going to move to the 4-hour time frame, and hopefully I'm going to find it there, and I don't. I have a green UFO here, but the blue line is below. So I don't have an enveloping condition. So I want to give it a last change with the 1-hour time frame. Do I have an enveloping condition? And I don't. Notice how the UFO is above and the EMA reference is below. So no trade at this moment in time because our rules are not met. While we have a valid climate and we have UFOs, the location of the UFOs are not in line with the location of the EMA, which is my mechanical reference. Could you take the UFO by itself without the EMA? Of course. You can do many things. You can have many variations of the strategy that I am presenting. Maybe you are a Fibonacci trader, and the way you trade is that, you look at the move from here, from below all the way to the top, and look at that. The 78.6 is lining up with the UFO, so you take the trade there. So nothing wrong with that, as long as you know what you're doing, you have backtested it, you know what to expect, your emotions are under control, you manage the risk. It's indeed smart. But again, in these sessions, I'm just going to show you how I trade, and I do use the EMA as a reference. So no Kiwi yen. Let's take a look at the Aussie Swissy, which is a non-confirmed climate. So I'm going to pass, look at the Aussie yen, which is a confirmed climate, and we are actually very close to the EMA. So we may have a trade here. So let's take a look. I'm just going to move my blue line to here, 94.27 more or less. That's where the EMA is. Let me move the line a bit to the left so we can see the blue line actually. Okay, and notice how the blue line is actually inside this UFO. Okay, now this is a 1-hour UFO, so I want to start with the daily. Okay, where the daily UFO is lower, I want to look at the 4 hour. The 4 hour UFO is lower. And if I look at the 1 hour UFO, so the 1 hour UFO is right here. Okay, and actually I have two enveloped UFOs. If you look closely, actually there are two lines here. Okay, depending on the resolution of your screen, you may see one, or you may see a thick one, or you may see two. And that's because those two UFOs are kind of like overlapping here. So actually two UFOs are to be combined, starting with an upper price point of 34.36 to a bottom price point of 93.80. That's going to be the trade setup I'm going to use for my entry, knowing that this is indeed enveloping the blue line, which is the EMF, but I'm relying on two UFOs instead of one. Okay, there are two piles of on-field orders here. So I'm going to do that. Okay, now, before I get excited with the entry, let's take a look at where the target would be. So if I turn on, that is not something that makes me too happy, to be honest. 95.55. I may pass on the trade. Okay, let's do the math, but I may end up passing on the trade because the target should be based on this red UFO, which is 95.55. Okay, so if I make this target to be 95.55, and my entry is based on this UFO, which is sorry, not that UFO, that UFO, which is 94.36. So if my entry is 94.36, my target is 95.55, and my stop is right here at 93.80. So this is actually it's better than what I thought. Actually, yes, we're gonna go for it. I visually speaking, for whatever reason, I thought it was worse. This is a 2-to-1. So if I risk $100, which is what I'm gonna do, I'm gonna make 200 if right, and vice versa. If I'm shooting for $200 of profit in exchange for $100 of risk. So it's a 2-to-1, which I'm okay with that. Okay, again, some of you may be more conservative and you want 5-to-1, 3-to-1, all okay. In my case, I'm a bit more relaxed on risk management, and also one of the purpose of these sessions is to get you tools for you to practice and develop your skills. So hopefully this approach, this coaching approach to guiding you into how trading is done, if you were to trade like me, which you don't have to, that's obviously your decision, but that's what I do. So if you do what I do, so 2-to-1 is acceptable, and then you will go for it. So of course, using real money, paper money, large size, small size, all of those are your decisions, including not taking a trade at all. All of those are your decisions, and for sure, I respect that 100%. I'm not here to push anyone into any trading decision, but I do want to give you all the reasons behind why the trade setup is approved by me based on my set of rules. So if you want to experience with my set of rules, if you want to, complement or enhance your trade plan with some of the rules I use for myself. So again, certainly you can do that, and I want to give you all those details so you know how to do it. So anyway, the trade is ready to be taken. 94.36 is the entry. 93.80. I'm just going to go a little below. I'll go 75. That's going to be the stop. And my target 95.55. So if I click buy, that's going to put the order in the system. Okay, here we go. So we have the entry 94.33, stop 93.75, and a bit higher all the way up here 95.55. That is the target take profit for this trade. Okay, so the trade is in. I'm just gonna put it on the screen like that so you have a nice screenshot in case you are into taking screenshots and you wanna take a screenshot and document it so you can study that in your free time, review it, and so on. And we're going to move to the next one, okay? So any question, my friends? This was the first trade of the day after a long conversation on trade management that was needed. And from there, we'll move into other market opportunities. One thing as well I would like to show is the fact that if I go back to WebTrader, you can see how the Aussie yen trade is right here, okay, and it's there waiting to get filled. And again, we'll talk about it hopefully next week. Next trade. So I'm gonna change trading style, okay, because we talked about long-term trading. So I'm gonna make myself a bit more active now, and I'm gonna do that by moving to my list, my my watch list here with the city index assets. I'm going to start looking at the S&P, and instead of looking at the weekly time frame, I'm going to move to the daily time frame. Okay, and see what we have. So we're not going to touch the S&P in the daily time frame because we are about to see a change of climate. You can see the negative number there. So the climate is red, but it's about to change to blue. You can see every time we have one of those gray lines, it changes color. So we have a gray line, which is an anticipation for a change of climate into tomorrow, because it's a daily time frame. So I'm just going to leave it alone. What about the Nasdaq? The Nasdaq is still a down climate. So in that sense, we could certainly plan on it. But I'm not too keen to do it because if you look at this red UFO above price, look at how wide it is. It's so large. And when a UFO is so large and the entry is one side of the UFO and the stop is the other side of the UFO, then the problem of that is that basically you are assuming a very large risk. And I do not like to assume a large risk, especially given the fact I can go and check other markets like the Dow Jones Index, for example, which is, by the way, already in a blue climate. So maybe this is a much better candidate for us to start planning on a long, okay? Like we did some time ago, which worked actually pretty well. So I'm going to move to 32,182, something like that, which is where the EMA is. Okay, something like that. This is the blue line, and I'm going to move to the 4-hour time frame. Begin my analysis with 4 hours. Okay, 4 hours, there is no green UFO. What about 1 hour? 1 hour, there is a green UFO down here, and to be honest, it looks very nice to me. Okay, it looks very nice to me because even though you may say, hey, Jose, wait a moment, the blue line is not enveloped by the UFO. Well, guess what? Yes, it will be if the Dow comes down to our green UFO to this price, which is the entry price. Guess what? Because the moving average, it's called moving for a reason, it moves. So if the price goes down from the current price of 32,598, it goes down all the way to the moving average. Guess what? The moving average will bend a little bit and go down, right? So you can see it here. So for the ones of you that are newer to trading, so if you look at the EMA, for example, on that date, I was clicking on the wrong chart. Give me a second. So if you click at the EMA on this particular date, you see how the EMA is just going up. The black line is just going up. But notice the next day when the market dropped, notice what's happening to the EMA. It's flattening. It's not going up anymore. It's flattening, right? And if the market was to drop even more, now it's pointing very slightly, but it's pointing a little bit down, okay? So the EMA moves. That's why it's called moving average. Okay, this is kind of like a bad joke, but it's true. Okay, and sometimes we forget. So I am expecting this blue line to be inside the EMA if the Dow Jones was to fall to 32,139, which is the entry price we will want to use for an entry. Okay, I'm going to take another sip of water, guys. Cool. So therefore, entry for this trade, 32,139. This is our Dow Jones trade. Okay, 32,139. Now, take profit and stop loss. Where are we going to set that? Well, let's start with the stop. 31,928. Okay, 31,928. That's the end of the UFO. Let's make it 925, something like that. Just a little bit of extra room below 28.5, we go to 25. Okay, so that would be the location for the stop. And what about the target? Well, for the target, if I turn on the UFOs on the daily time frame, so we can see a target here of 33,512, which that 517.5, which that would make this trade to be a 6-to-1, which is certainly a very powerful trade. Now, of course, trade management applies. Again, the further away your targets, the less likely you will get there. So you may get this trade to start working very well in your favor, and next thing you know, after making 3-to-1, 4-to-1, turn around and stop you out for a loss. So please don't allow this to happen, and apply what you learned today earlier in our session when we talked about trade management. Okay, so what if I want to risk $100 per trade? What if I want to risk $100 per trade? So that would imply a size of 0.4 units. And I believe I I must have, yes, I did change my price of the target by mistake. So 517.5. Yes. So 32,139. Yes. Entry. 32,925. Yes. Stop. 33,517.5. Yes. Target, which is the UFO on the other side of the screen. So again, red color, red UFO. That's going to be my profit. Red color end of the UFO. That's going to be my stop. And blue color entry UFO. That's going to be my entry price. Okay. So I'm not sure if the arrows with the color code are helping or confusing, but anyway, we'll all learn differently, so hopefully it helps. I'm just gonna click buy to enter this trade in the system, and this is trade number 2 of the day. The trade is in, my friends, and the opportunity for practice sorry about my voice. The opportunity for practice is there, okay, with an entry at 32,139, with a stop at 31,925, with a final target located 6 plus 2-1 away at 33,517.5. So maybe this is a good time as well for a screenshot. And also I'd like to ask for some confirmation on the chat box, if that's okay. Everybody, if you could just go ahead and type okay, all good, understood, anything of that sort, that would help me to know that all is making sense to you. And I believe we have time for another trade, which the next one is going to be a short-term intraday. So hopefully we can find it and actually take it during the session. I'll take another sip of water. Thank you, everyone. Cool. Okay, so let's go for it. Next trade. Thank you for those confirmations, Jeff. Very appreciated, as always. And I am now moving to, just out of having a bit of fun, I'm going to look at crude oil and look at something intraday. So we're going to move to the 1 hour time frame to see what's the climate. So the climate on crude oil on the 1 hour time frame is an up climate. Okay, so just like here, we got a retracement to the EMA and it bounced. So we are looking for the same if crude oil was to fall a bit more and we catch the bounce. That's what I'm looking to do. So let's see if we have an opportunity for that. We took a trade on the crude oil last week, and that was a losing trade. Let's see this week if we can make it work. So 91.40, that's the average price for US crude oil. Sorry, guys, I need to cough. Okay, I'm back. So if we look at the 15-minute time frame combined with the 1 hour time frame, we do not have a trade at the moment. Like an hour ago or 2 hours ago, we did. All of this was a green UFO. So if you had taken the trade, again, this is an example. This is a perfect example of what I mentioned before. So if you took the trade at that time, crude oil would have been moving your way for a while, and now it's coming back against you, right? So again, trade management applies to lock in some of this profit and not to be stopped out for a loss. So again, it's important to do trade management, no matter your trading style. If you are an intraday trader or a longer-term investor, of course, you do trade management maybe once a day only instead of once every 10 minutes if you are an intraday trader. But certainly looking at the markets instead of closing your eyes, it's certainly something that would be powerful to do, okay? Anyway, so 15-minute time frame does not show any UFO. What about the 5-minute time frame? So 5-minute time frame, there is a UFO, but is lower. Okay, there is a UFO, but is lower, significantly lower. So I am not keen to execute a trade on crude oil because we don't have a setup where the UFO is enveloping the EMA. And while it may work very well, because on-field orders are present, again, my set of rules, just to make myself picky, have me to only trade when I have a confluence of the EMA, which is being enveloped by the UFO. Okay, that's it. So that's what I do. So that's why I'm not going to break my rules, even though this trade could make a lot of sense. Okay. Let's take a look at major pairs. I'm going to start with the Aussie. Okay, so what's going on with the Aussie? We have an up climate on the 1 hour time frame. So let's see. So 64 45 right there. So this is the EMA, and if I look at the 15-minute time frame, we have a UFO there waiting for us right there. Okay, from 46 to 37, there is a tiny UFO there. So if we take this trade, okay, and we look at target, so target will be located at 65, which, to be honest, looks very powerful. It looks like a very powerful trade. That's like a 10 to 1, if I'm not mistaken with the math. Probably a bit less, but it's looking very nice. So 64, 46, let me make it 47. That would be the entry. The top of the UFO. The bottom part of the UFO is 64, 37. So I'm just going to make it, let's call it 33. And the target will be 65, 05. Okay, so that's a 4 to 1. So yeah, I don't know how I did the math in my head. It's not a 10 to 1, it's a 4 to 1, which is still very nice. Okay, and again, just to explain the rationale of this trade. So again, the rationale of this trade is that red UFO is being used as a target. Okay, this is the UFO which is being used as an entry. Okay, and the bottom part of this entry UFO is being used as a stop, okay, in case we're wrong. So if that's the setup, okay, and you want to risk $100 per trade, so then that is the trade to be taken, okay, and it's a 4 to 1 as we said before. And wait a moment, if I want to risk $100, why is it that I am not being allowed to take this trade? Yeah, I believe this trade may exceed some risk parameter in my account. So notice, if I want to risk $50, I'm allowed to do it. If I want to risk $80, I'm allowed to do it. If I want to risk $90, I'm not. If I want to risk $85, I'm not. So it's allowing me to risk up to $80, which very, very likely has to do with some setting in my account with the maximum risk. Or maybe I just messed up with the location of the target. Let me take a look. Yes, that was the one. Sorry for that, guys. I mean, I do set in my account rules for risk management overall. And because I have other trades, in my mind, I was thinking that maybe I'm surpassing that number, even though by risking only $100, I was also thinking, it seems to be too little. But yeah, my mistake in the end was really that my target price has moved and it was too close, so you could not take the trade. So anyway, this is the trade, your 4 to 1, $100. So I'm just gonna place the order, and the moment I place the order, you can see very nicely, very visually here, that we are looking to enter at this price point with a stop at 33 in case we're wrong, and with a target at 65.05 in case we are right. And the distance from here to here is 4 times more than the distance from here to here. So that's a 4 to 1 trade. Okay, so this is probably another good time for another screenshot, as we are now getting ready to say goodbye in today's session, because the session is basically over now. But before we say bye, certainly I'd love to hear your feedback. How is it going? How was the session? How were the prior sessions? How has it been now that we have been running CFD sessions in partnership with City Index for a month? Any feedback is welcome. In the meantime, I would like to get those QR codes back to the screen, so you can take a screenshot or scan them and use them. Go take a look at those promotions, which are certainly very beneficial. And certainly I'd love you guys to phrase it on the chat box on how is it going. If it's all good, just type good. It will mean a lot to me, believe me. if something would be requested from you. Let's say you tell me, hey Jose, what about, you spend a bit more time with stock CFDs. Hey Jose, what about next time you talk about more about the location of the stop? Hey Jose, what about if next time you do this? Again, any feedback would be welcome. And if you have some direct critique of certain things that you think I'm not doing in a way that is helpful to you, I'm a trader. I can take winners, I can take losses, and certainly I don't mind that you tell me something not so nice to hear, but makes the sessions better in the future. I'll take it happily, guys. Okay, I'm very, very happy to listen to your feedback because I want to help. And without hearing from you, again, I could do what I think is the right thing to do, but at the same time, I may be missing what you truly need because everybody's different. So you guys let me know, okay? Yeah, so it seems that no feedback, so I guess all is good. Well, if that's the case, I'm just gonna say goodbye, everybody. Again, if maybe the way you want to share your feedback is by emailing me or something like that, for sure, you can also email me. You can see the email on the bottom part of the screen here. Okay, Jose Blasco, Jose@tradewithufos.com. So you can certainly email me, and for sure, I'll be glad to get back to you. Everybody, I just hit the wrong key combination. Everybody, you take care. I will see you soon. I will see you next Monday on the CFD sessions or in any other of the sessions that we conduct on our channel. You guys take care, and CT Index, thank you so much for being our partner in those CFD sessions, because again, it's a great thing to be able to count on such a powerful proper broker for those sessions, which is not that commonly found in the world of over-the-counter products such as CFDs. And certainly it's great to team up with CT Index to do these sessions together. So thank you for that, CT Index, and thank you to all of you for attending the session live or watching this recorded. Take care. Bye-bye. See you soon. Take care.